Nour is a market strategist at ADS Securities and joins us live from Abu Dhabi now. Nour, thank you so much for joining us. So essentially the ECB buying itself a little bit of time, but also creating a whole lot more uncertainty for the markets. Is it right to be so passive?
Good morning and welcome to sunny Abu Dhabi. I'm pleased to be on the show again. Well, basically the ECB is giving the markets and giving itself more time to have a look at the numbers or the next few weeks. We have on 24th of February, we're waiting for the CPI again. Further decline in the CPI may lead for another rate cut by at least to 0.1%. And Mario Draghi, also the ECB chairman, made it clear that the bank is ready to act if things worsen. But the latest figures from at least most of the economic activities show that further disinflation risk is rising. So basically we're keeping our forecast like for another rate cut maybe as early as March.
Do you think the ECB was wise not to give out more detailed forward guidance last year? Because we saw what happened to the BOEs and the Fed's forward guidance. They were surprised by much better than expected economic data. Maybe the ECB was right to be so vague after all.
At least maybe the ECB had wider outlook of the markets. At least with the debt, with the debt levels remains high and the unemployment remains high. There's no chance or there's no reason to give a forward guidance within these levels of unemployment. It's still at record highs, or at least declined to 12% in the eurozone. But at least for the next few weeks, I don't think so that the ECB will even talk about the forward guidance as far as that level remain high and unemployment still unstable, or at least not declining to the levels that the ECB forecasted last year. So we're keeping as the forecast for further measures by the ECB, and at least we're not saying just only a rate cut. The rate cut won't be enough if the ECB decided to cut the rates, but further measures could be taken in with the rate cut.
Speaking of fleshing out and tweaking forward guidance, what do you expect from the BOE this week?
I'm looking to see a change in the threshold or the unemployment threshold to 6.5%, and the Bank of England may change the inflation target from a target to a range or a comfort zone between 2.2 and 1.8. This is most likely to happen because for the past few weeks also we've seen the economic activities also improving further despite the weather effect right now that's happening. So the effect is not there yet, but most likely the forward guidance will be reduced in terms of the unemployment rate, and inflation will be a range in between 2.2 and 1.8.
Nour, before we let you go, what do you want to own? What do you want to sell this week?
For this week, what I want to sell, it all depends on Janet Yellen. Basically, after the jobs report that we have seen last week, it remains concerned for me that I'm concerned about that most or more than half of these jobs that created was low wages jobs, temporary jobs, part-time jobs, which is concerning since last year. So basically, I'm going to be waiting for Janet Yellen, which everybody knows that she's very dove. So I don't think so. Basically, with the current figures from the jobs sector, they might continue with QE tapering because weather has a minor effect, especially after the construction sectors added more than 45,000 jobs, meaning that the weather had a minor effect on the economy.
Right.
But this could be the QE tapering effect.
All right.
They'll be waiting for.
Nour, thank you so much for that. Nour Al-Hamouri, market strategist at ADS Securities, joining us live from Abu Dhabi. And that wraps things up for